Hey traders, I wanted to share with you our trading results from our live trading room for our zero date expiration strategy from last Friday. This is Friday, February the 5th, a couple days ago, and really a scary day, really a very, very scary day. And I wanted to share this for a couple of reasons. Number one of the biggest questions that I get asked over and over again on zero day, trading so tight, so, a day trade, such a short-term trade, is, what happens or how viable is that strategy if the market's volatile, if the market is going crazy? I mean, what would happen in that strategy if the Dow was up 700 points on the day or down 700 points on the day? And the answer is, really, those are the best possible days that you could have. Again, it doesn't assure you making money, but it certainly raises the probabilities or the likelihood, because the number one thing that drives our potential to have an edge or an advantage in making money with the zero date expiration strategy is IV. And the higher the IV, the better chances we have. The further out we can push our strike prices, the bigger the premiums we get. It just stacks the odds in our favor. Well, this past Friday was anything but that. This past Friday was absolutely almost no movement in the marketplace. Now, Friday's market move was probably very normal if you go back a couple years in time, but we have gotten very used to these huge swings, not just in price, but in volatility in the marketplace over the last year or two. And Friday's was a little bit of an aberration. Very, very low IV, very little, if any, movement at all. You can see the day's action right there. There's Friday's open, there's Friday's close. This chart does not do the market justice. There was hardly any movement at all throughout that day. It was a little concerning, actually, if we think about it. But the results were sort of interesting. We sold some puts right off the bat. We also sold some calls. And then we quickly started to close one of those calls. We started to quickly close one of those puts. And then before the market closed, we closed those remaining calls. Now, just for context here, I'll give you all of our timestamps there. You can look at the timestamps. This is Mountain Standard Time is where I trade out of. And so you can see we got started about 8:52 in the morning with the first put leg right here. Here's our first put leg right in here. Whoops. There we go. First put leg right in here. And then our second leg was right in here. I'm going to try to see if I can delineate these on there. So there was our first put leg that went in right there at 8:52 a.m. 9:11 a.m. we put in the call leg. And then at 9:36, you can see right there, we started to pull. We pulled our first call leg. And then at 10:39 a.m., we started to pull our put leg. And then at 12:23 p.m., so this would be, an hour and 40 minutes before the market closed, we ended up pulling our call leg. So we ended up putting our trades on and pulling them very, very quickly. And it was simply because we were so close on our pricing with these trades that we just simply didn't want to have the open exposure risk. And I am often referenced the phrase or the saying of one of the great traders of all time, Kenny Rogers. He said, you got to know when to hold them, you got to know when to fold them, got to know when to walk away, got to know when to run. You never count your money when you're sitting at the table. There'll be time enough for counting when the dealing is done. You got to know when to hold them. You got to know when to fold them. Some days, the best trades are probably no trade. And in retrospect, Friday, we probably shouldn't have traded at all because the risk-reward ratio just gets completely out of whack. But we were prudent and we were diligent in our trades. It ended up being a small day for us. You can see my results right there. Number one, I traded very small. Where I usually trade $40,000 or $50,000, I traded $4,000. Number two, the results were not amazing. Sometimes we get 5, 6, 7, 8, 9, 10% rate of return because we closed both of our legs early, got 3.8%. But I want to keep that in context. Number one, we had a tough day. It was a challenging day for trading this particular strategy. And you know what? We still made 3.8% rate of return on our cash on that day. Granted, it was a smaller amount of cash, but that's prudent as well because we want to scale and position size according to the risk level that we feel comfortable with. So I just wanted to share that idea with you that you don't, whatever money you're putting into a trade, whatever money you're putting up, doesn't have to always be all at risk. We do and we can close out these trades early very often, and we book 50% capture rate, 60% capture rate. And you know what? That's okay. If you can still make 3.8% in a day and be out of the trade early, you know what? So much the better. So just thought I would share that with you guys because it is an interesting trading environment that we are in right now, where we are having actually some pretty low IV, and it is getting tougher and tougher to manage these zero-date expiration strategies. If this is something that you guys are interested in, if you're not part of our live trading group, I'll drop a link in the description box below. You guys can come check it out for a couple days with a free trial.